Imagine a financial world where only the wealthiest could grow richer through investing. Then comes Jack Bogle, a true investment hero, changing the entire game with Vanguard. Bogle's life journey, marked by innovative grit and financial savvy, altered how millions view investing, leading to the rise of the common investor and low-cost funds. This isn't just a financial revolution, it's a story of resilience, creativity, and wisdom. Humble beginnings, from scholarship kid to Princeton grad. Born on May 8, 1929, during the Great Depression, John C. Jack Bogle grew up in Montclair, New Jersey, where economic hardship profoundly shaped his life view. Despite financial struggles, Bogle's academic talent earned him a scholarship to Princeton University. His senior thesis, The Economic Role of the Investment Company, laid out his early vision for mutual funds as accessible, low-cost investments for average Americans. This thesis caught the eye of Wellington Fund founder Walter L. Morgan, who hired Bogle shortly after graduation. Rising to the position of CEO at Wellington, Bogle learned invaluable lessons in leadership and risk management. However, a merger he initiated went south, leading to his dismissal in 1974. Rather than giving up, he founded Vanguard, which he structured as a client-owned firm. A revolutionary idea at the time. Vanguard's model removed external shareholders, meaning profits were funneled back to reduce fees for investors, ultimately democratizing access to investing. The index fund gamble, Bogle's Foley's Burger of finance. In 1976, Jack Bogle took a bold step by launching the world's first index fund for retail investors, the Vanguard 500 Index Fund, which aimed to mirror the S&P 500. Known as Bogle's Folly due to widespread skepticism, many on Wall Street doubted anyone would invest in a dull passive fund instead of an actively managed one. Bogle's approach targeted an industry then rife with high fees and underperforming managers. The Vanguard 500 Index Fund's initial capital raised was modest, just $11 million. However, Bogle's argument that over time, the stock market's growth would likely outpace the gains of actively managed funds after fees proved prescient. Today, the fund holds over $800 billion in assets, showing how passive investing can yield significant returns through minimal fees and long-term growth. This approach laid the foundation for what is now a multi-trillion-dollar industry, making Vanguard one of the world's leading asset managers. The power of low fees, winning by not losing. Jack Bogle understood that even small fees could drastically reduce long-term returns. He structured Vanguard to operate at cost, channeling profits back to investors by lowering fees. By doing so, Bogle challenged the traditional fund model, which typically prioritized profits for shareholders over client returns. His focus on minimizing expenses and maximizing investor returns led to an average expense ratio of around 0.1% for Vanguard funds, far below the industry average of 0.60% to 1.5%. This low-cost model not only made Vanguard a leader, but also pressured other firms to lower fees, creating what is now called the Vanguard effect. In 2024, this impact persists, with more fund companies adopting fee reductions as competitive measures, validating Bogle's assertion that high-cost funds diminish investor gains over time. By reducing fees, Bogle empowered millions to achieve better financial outcomes with greater ease, navigating skeptics, turning naysayers into boggleheads. While Wall Street initially doubted Bogle's approach, his philosophy cultivated a loyal following known as boggleheads. These investors swear by his principles of low-cost, diversified, and long-term investing. The boggleheads community, founded in the early 2000s, has grown globally, featuring an annual conference and popular online forums where members discuss investing strategies aligned with Bogle's vision. Their motto, "Stay the course," emphasizes resisting the temptation to time the market or make frequent trades, a principle proven effective as boggleheads navigate turbulent markets with patience and discipline. In 2024, boggleheads continue to advocate for financial education and disciplined investing, offering support to new investors and reminding the financial community of Bogle's revolutionary impact. Their approach not only demonstrates the effectiveness of his low-cost philosophy, but also highlights the communal support essential to long-term investing success. ETFs versus mutual funds, a debate Bogle won from the grave. Although ETFs have surged in popularity, Jack Bogle repeatedly warned about their downsides. In the 2024 Morningstar report, research reveals that ETF investors often miss out on gains because frequent trading leads to behavioral gap losses, essentially buying high and selling low. Bogle believed that ETFs encouraged impulsive trades, undermining the consistent returns possible with a buy and hold strategy in traditional index mutual funds. His concerns weren't unfounded. The Morningstar study showed that, on average, ETF investors lose an additional 1% annually in returns compared to mutual fund investors who typically hold steady. Despite ETFs' appeal due to their flexibility and accessibility, this report underscores that investors may benefit more from index funds that support disciplined long-term investing. Bogle's vision still rings true as his argument for simplicity and patience has been validated over the years, reinforcing that sometimes doing less yields more in investing. Buy and hold, the zen of staying the course. Bogle's well-known phrase, "Don't just do something, stand there," reflects his approach to disciplined, patient investing. He promoted the buy and hold strategy, believing it to be the most reliable way to benefit from the stock market's historical growth trends. For Bogle, patience was the unsung hero of financial success, allowing returns to compound over time without being eroded by transaction fees and market timing mistakes. During recent market fluctuations, long-term Vanguard investors following Bogle's advice saw more stable results compared to active traders. By 2024, the value of staying invested has only become more apparent as global events and economic shifts have highlighted the dangers of reactive investing. Vanguard's resilience in performance demonstrates that those who resist the temptation to react to every market change often see better returns in the end, a lasting testament to Bogle's simple yet profound advice. The Vanguard effect, reducing costs for everyone. Bogle's dedication to low fees ignited what is now known as the Vanguard effect, as his revolutionary approach forced competitors to lower fees, benefiting investors worldwide. Vanguard's unique structure, which channels profits back into the company to lower costs, pushed firms like Fidelity and Charles Schwab to follow suit, sparking an industry-wide shift toward affordable investment options. By 2024, the Vanguard effect has saved investors billions of dollars in fees, setting off a chain reaction where low-cost investing became the norm, not the exception. Vanguard's model underscores the idea that investment firms can prioritize clients over profits, fundamentally altering the power balance between Wall Street and individual investors. Bogle's vision of making wealth building accessible has left a profound impact, and his legacy continues to support average investors as they grow their wealth without the traditional expense drag. Unshakable principles, simplicity wins. Bogle's core investing philosophy remains timeless. Minimize costs, diversify broadly, and maintain a long-term perspective. His book, Common Sense on Mutual Funds, published in 1999, outlined 8 principles that continue to guide investors in 2024. These principles include scrutinizing fees, staying wary of high-performing star managers, and holding a diversified portfolio rather than multiple overlapping funds. Bogle firmly believed that complexity often masked higher costs without adding real value, a stance that resonated with Vanguard's straightforward fund offerings. Vanguard's adherence to these principles has sustained investor trust and loyalty over decades, proving that sometimes the simplest strategies are the most effective. Even as the financial industry evolves, Bogle's Boglisms remind investors to prioritize transparency, caution, and simplicity, reinforcing his belief that true financial success doesn't need to be complicated. The future of Vanguard, staying true to Bogle's vision. Since Bogle's passing, Vanguard has upheld his principles, focusing on low-cost funds and investor-first policies. In 2024, Vanguard continues to lead in assets under management, recently surpassing $8 trillion. The firm's dedication to Bogle's ideals reassures investors, providing a safe, reliable approach to wealth building. Vanguard's ongoing success demonstrates the resilience of Bogle's vision, proving that an investor-focused approach can compete in a high-stakes financial world without losing its values. Legacy of a legend, more than just money. Jack Bogle's contributions to finance were monumental, but his legacy goes beyond dollars and cents. His emphasis on fairness, honesty, and investor education changed how people think about investing. Known for his sharp wit and humility, Bogle wasn't just a financial pioneer. He was a mentor and guide for millions. His principles continue to empower investors to achieve their financial goals, ensuring that his impact will endure for generations. Through Vanguard, Bogle's teachings live on, a beacon of common sense investing for those willing to embrace his timeless advice. Thank you for joining us on this journey through the life and legacy of Jack Bogle. If you've been inspired by his groundbreaking ideas on low-cost, long-term investing, give this video a thumbs up and hit that subscribe button. Remember, sometimes the best investment strategy is the simplest one. Keep investing wisely, stay the course, and we'll see you in the next video.